Hey guys, welcome back to Clownfish TV. This is Neon. We're going to talk about Netflix in the stock market. Catastrophic news today. Netflix has plummeted over 20%, on pace for its worst day since July 2012. Basically, it's a combination of things going on, as I understand it. The stock market bubble is bursting. We've heard about this, we've been hearing about this for a couple of weeks now, that the super bubble is going to burst, that 2022 is not going to be terribly good for stocks, but also that these streaming services like Netflix and Disney Plus are hitting a ceiling on the number of subscribers that they realistically can onboard. And there's so much competition out there that a lot of people are picking and choosing which streaming services they want, and they don't have the money for 20 different streamers, right? And Netflix has not been giving them the content that they want. So something's got to give, and it's Netflix. We're going to talk about this. We're going to talk about it. Before we get into it any further, please subscribe for more pop culture news, views, and rants, guys. Over 254,000 subs. Thank you so much for the support. We do talk about Netflix. We talk about Hollywood. We talk about the streaming wars. We talk about the business side of making things and the business side of entertainment as it dovetails with whatever it is we are talking about that day. And in this case, we've been kind of following the business of Netflix because, we have been saying for at least a year now that Netflix and Disney Plus and all of these streaming services are eventually going to hit a ceiling on the number of subscribers they can get. This is why they're pushing so hard into countries like India, because there are a lot of people there. But to get India to subscribe to Netflix and Disney Plus, they've had to rock bottom the price. And in Disney's case, I think it was like 45 cents a person is what it broke down to. And they keep jacking their rates up too, which is also going to slow subscriber growth. And they thought, well, if we jack up our rates, we're going to make more money. The shareholders will be happy. And actually, sometimes it has the opposite effect. You jack your rates up too high and people aren't willing to pay $20 a month for Netflix. Lots of stories on it. Market Watch, Netflix is shedding more than 50 billion in market cap after borderline catastrophic forecast. This one from CNBC, Netflix plummets 20%, on pace for worst day since July 2012. Lots. Netflix, Peloton, Disney Plus, bringing pandemic stock era to a shuddering halt. I mean, look at all this red. This is bad, guys. It's bad. And this story was a day or two ago from Market Watch, where an analyst said that we're approaching the end of the super bubble. People, they had some extra money because of the stimulus, and the economy now is up in the air. We thought we'd be through the pandemic by now. We're still not. So let's pick an article here. We'll go with Market Watch. Netflix is shedding more than 50 billion in market cap after borderline catastrophic forecast. Executives expect less than half of the net new subscribers that analysts projected for the first quarter of 2022, sending shares down more than 20%. Netflix brought in more than 8 million new subscribers in the holiday quarter, but executives predicted that growth would suffer much more than expected in the beginning of 2022, sending shares screaming lower on Friday. Netflix down 23%. Holy God. 23%. Let's see what that. Oh my God. Look at that. Look at that. Whoa. All right. That's not good. I have Netflix stock. That's not good. Netflix on Thursday afternoon reported 8.3 million net new paid subscribers in the fourth quarter, trailing its own forecast for 8.5 million, but roughly hitting the average analyst forecast of 8.3 million, according to FactSet. The number allayed the stark warnings of some analysts, including JP Morgan's Doug Anmuth, who had feared a significant shortfall of new subscribers. Okay, this is the thing. We've been telling you, eventually you're going to hit a ceiling. Everybody who wants Netflix has Netflix. Everybody who wants Disney Plus has Disney Plus. Executives do see a slowdown ahead. They just predicted 2.5 million new subscribers in the first quarter, less than half of the 5.8 million that analysts were projecting on average. Netflix shares plummeted more than 20% in Friday morning trading, lopping off more than 50 billion in market cap from the streaming giant, which ended Thursday's trading session worth about 225 billion. That decline is more than the total market cap of Zoom Video. which was worth less than $47 billion on Friday. They talk about Spotify. They talk about Peloton. In a video call following the results, Netflix Chief Financial Officer Spencer Newman said it was tough to pinpoint why net new subscribers are plunging, but it could be attributable to COVID overhang. After 2 years and a marginal impact from competition. Marginal impact from competition. No. There are way more streaming services out there. And Netflix has not really been hitting it out of the park lately. I don't think they have been. I think the content's been mixed and they jacked their prices up. People left for various reasons, but yeah. Netflix executives said the lack of new original programming, especially early in the quarter, was a factor in their forecast. A lot of people subscribe to Netflix or Disney Plus or HBO, watch what they want to watch, and then they dump it again for another 6 months until a show they like comes back on. Netflix unloaded a wealth of new content in the holiday quarter, including Witcher, Emily in Paris, Don't Look Up, Red Notice, but it's not expecting another big new release until later in 2022. So people are canceling. Why are you going to keep Netflix if you already watched, Witcher or whatever, Squid Game or whatever you wanted to watch, right? So Netflix's subscriber growth has waned as the COVID-19 pandemic has marched on, and the streaming service added 18.2 million new subscribers in 2021, fewer than it added just the first 6 months of 2020, when the virus first spread across the globe, caused a wave of shelter-in-place restrictions. Yeah, Netflix was like crashing and all kinds of crazy stuff because so many people were watching streaming because they had nothing else to do. And these companies thought this was going to go on forever. They're in for a rude awakening. A lot of these companies, Netflix, Peloton, Disney Plus, they were betting on Disney Plus, Zoom, all of these companies that kind of exploded during the pandemic because people were locked in their houses. It's ending. Here's another article from Yahoo Finance. Via Bloomberg, the COVID-19 pandemic isn't over yet, but the boom it helped create for stay-at-home stocks is vanishing. Netflix and Peloton, two of the highest profile stars of the lockdown era, both plunged on Thursday, the latest sign that investors have moved on from the so-called pandemic trade. Netflix expects to add a paltry 2.5 million users in the current quarter. They talk about Zoom, DocuSign, all these companies. Traditional media companies that have styled themselves as streaming businesses also took a hit on Friday. That includes Disney and Viacom. Everyone expected a company like Peloton to suffer a slowdown as it emerged from the pandemic, but the severity of it came as a surprise. Peloton cut its 2022 forecast by about $1 billion, and it's reportedly pausing production of bikes and treadmills to cope with the slump. Again, people who are going to work out couldn't get to the gym, and a lot of gyms are open again. They have restrictions, but they're open. But people who were going to work out and couldn't get to the gym, they already bought their bike. They already bought their treadmill. Hell, I bought a new elliptical, but that's it. It's a one and done purchase. We thought there'd be a softer landing in terms of post-COVID demand, said this analyst. This dashes hopes to some extent. No shit. This is bad. This is really bad. So the bubble is going to burst on this. I think the bubble is going to burst on streaming. And again, you need to bring it. You can have millions and millions of subscribers, but if you're not bringing the content to keep them there, and you keep jacking up your prices, and you keep turning out shit like Cowboy Bebop, people are going to tune out. They're going to tune out. They're going to drop Netflix. I can tell you the truth. Of all the streaming services we have, and we do probably have like 4 or 5, Netflix is the one we watch the least. We tuned in for Witcher Season 2 just to watch it, but it was a chore. It was boring compared to the first season. It's the one we watch the least, and there are better options out there. Tubi and Roku are both free, and frankly, they've got better programming, or at least stuff that, I'm more into. So I don't know, guys. Very interesting. I have to wonder if this is going to affect anime production over there at Netflix, because they were going all in on anime, but, animation's expensive. See what happens. Going to wrap this up. Please subscribe for more pop culture news, views, and rants, guys. We'll talk later.